Why do hard money loans exist for real estate investors? So this is a concept that I find most people simply don't understand. So when you drive down the freeway, the highway, whatever the case is, you see, get a home loan for 5% or 10% or whatever rates are at the given time. Right now, I think it's like 6.5% is what you'll see if you drive up and down the freeway where I am at locally at this time of filming. Okay. And they also drive down the street and they see Chase Bank, they see Bank, Chase, and Wells Fargo, and they see a credit union over here, and they see all these banks on every single corner, okay? All these institutions. There's a misconception about hard money and why it's there. I want to explain this so that you understand, because these banks and these credit unions, when they fund a loan, they take some money, and they do a loan for $500,000 or $300,000 or whatever the case is. And then they lend out, they actually pool up until they have 5 million or 10 million or whatever the amount is, 10 million, something like that. Then what they do is they take this package and they sell it to Wall Street. And Wall Street buys the package from them and refunds them their $10 million. Now, lots of times, the bank will retain the servicing rights. So you're still calling the bank and the bank's taking care of the servicing because Wall Street's not. So you're still making your payments to them, but then they're making their payments here. For Wall Street to be willing to buy these, they have a criteria that it has to fall under. So it's like loan A, B, C, D, and it just has to fit in these categories. If you don't fit in one of these categories, there's no loan opportunity for you. The biggest category that there isn't a place for on Wall Street is properties in need of work. So what happens is these banks and credit unions, everybody else, if they have a property that's in need of serious work, are not going to want to lend on that property, mostly because they're going to have a difficult time packaging it and selling it on Wall Street. This is the reason why hard money lenders exist, okay? So a hard money lender, as a hard money lender, what I'm doing is I'm giving a loan on a house that's in bad shape. We'll put a little sorry face on this one. It's just in bad shape. That is a loan that a bank, a credit union won't fund. They want houses that are in good shape. So to give you an idea of the things that are required for a bank or credit union to be able to do the loan is the appraiser goes through the property and has to look at these things. So does the grade not have a positive drainage, meaning away from the drains going away from the property? If not, it doesn't pass. Standing water, is there evidence of standing water? Well, individual water supply, does it have connection to public water? Here's the other things. You're like significantly cracks in the flooring system, evidence of water leaking, rodent infestation, framing, cracks, walls, damage, attic, holes, support structure, ventilation, crawl space, very similar things here. Roof, does it cover the entire house? Is there deterioration on the roof? If there's deterioration on the roof, you can't go get a loan from a bank on it. If the roof has less than 2 years, you can't go get a loan from the bank on it. If it has a flat roof, it requires an inspection, mechanical system. Is there exposed wiring? Is there frayed wiring? All these things. If the AC is not turning on, if the heat's not turning on, if there's evidence of any of these things, it cannot go. And this is the majority of properties that you're going to be wanting to go after to get a deal on, which is the whole reason why hard money exists. So if you're buying a property that's not in great condition or matches any of those things, it can't be funded by a bank or a credit union because they're not going to be able to sell it off to Wall Street. So it is funded by a hard money lender. So what a hard money lender is doing is getting you money to take something that's a non-bankable home. You can't go to the bank and get money for it, and turning it into something that is a bankable home, which then increases the value of the property because not just the repairs that have been done, but now it's bankable, and then selling it to somebody that wants to buy that house or refinancing that to turn that into a rental property. And that's the whole reason why hard money exists for real estate investors.